Hey, let's talk about PNB as well from the PSU banking space. That's in focus. They're looking to raise up to 10,000 crores via share sale. And that's something that was announced late last evening, keeping the stock in focus. And take it across to my colleague Ruchi Bhatia. She's joining us with an exclusive story as well. What the story is exactly about, Ruchi is here. She will fill us in more. Ruchi, India is planning to reduce import dependence, which could mean setting up import monitoring bodies for products and sectors with high imports and widening the scope of the restricted list. Do you have more details on this? What are you picking up from your sources?
Hi Karina, good afternoon. We're given to understand that Prime Minister Narendra Modi has given a clarion call for a more AatmaNirbhar Bharat and also has talked about reducing India's high import reliance. So as a part of that, Commerce Ministry along with DPIIT are in a huddle with the Prime Minister's office to see what can be done and how can India really reduce its import reliance. We're given to understand that the common consensus is that we should be looking at non-tariff barriers over tariff barriers. Remember, in the last couple of years, since 2014, India has put tariff barriers on as many as over 3,500 products as compared to 11,000 products that we currently import. We're given to understand that the government is of the view that non-tariff barriers will make more sense at this point of time. Non-tariff barriers include the likes of widening the scope of restricted list. Besides that, having some sort of an import monitoring mechanism as well. We're given to understand that the AatmaNirbhar push that the government is talking about will come with some sort of an eye on what the government can do with key areas or key sectors and key products. We're given to understand that the sectoral focus here will be for sectors such as textiles, food processing, leather, furniture, footwear, air conditions, TVs, refrigerators, as well as toys. We're given to understand that the government is looking at two things here. Firstly, have some sort of a specific import monitoring body to monitor and control the flow of imports from these sectors. There is a similar kind of body that we currently have for the steel sector as well. There are members from the DGFT that closely watch the kind of imports that flow in the steel sector as well, as a part of the specific import monitoring body that we currently have for the steel sector. We're given to understand that import monitoring body for other such sectors could also be put in place. Essentially, products that are under such a system are free to be imported, but they're subject to some sort of a compulsory registration that has to be done for every consignment to be brought in, which means that the government can keep a close watch on the quantity of the products that are coming into the country. Besides that, we're also given to understand that the government is looking to widen the scope of the existing restricted list as well. Restricted list would mean that these imports can come into the country only after the importers have taken a prior government approval. So we're given to understand that whole host of measures could be put in place over the next couple of days. The approval, of course, in this case would need the government's intervention, reaching out for an importer to reach out to the government and give them details on why they are getting this product into the country. Of course, the idea is to reduce India's import reliance, and we're given to understand that non-tariff barriers are going to be put in place for a lot of other important sectors as well.
All right. Hi, Ruchi. It's Varun here as well. Good morning. A couple questions. Just wanted to get your sense on this announcement. So they're still going to be allowing the imports in this sector from what you just said. It just seems that there's going to be a lot more paperwork and tracking right now. So do you think the primary objective of the government here is really to take a closer look at what's being imported so they then know what to prioritize making? Or are they doing this just to make the whole process a little more cumbersome and difficult for importers so that they are more prone to manufacturing locally?
Varun, you've hit the nail on its head. The idea is to boost domestic manufacturing, but we cannot really boost domestic manufacturing until and unless we know which are the products that are being imported, and which is exactly the reason that the government feels that perhaps this time can be used to find out and monitor which are the areas where we need to focus or drive our energy towards. As a part of that, we're given to understand that the government is going to have a closer look, because ultimately tariff barriers like the likes of custom duties, import duties, or for that matter anti-dumping duties, the government has realized is not helping much to boost our own manufacturing capability. While the idea is to ensure that the entire process of the imports that are being brought into the country, there is more paperwork, the process becomes a slightly more longish process, it will also give some sort of a breathing room for the policy makers to figure a way out in terms of which are the areas that they need to focus on in terms of ensuring that we push Make in India as well. There are various sectors. Look at, for example, areas such as consumer goods. We already have a production linked incentive scheme that has been put in place for sectors such as electronics as well as pharma. The government is also looking at a production linked incentive scheme for other sectors as well. However, there are other measures that the government is also looking at. For example, India has completely lost its competitive advantage in areas such as textiles. So what can be done to boost textiles in India? Besides that, the government is also focusing on areas such as agro processing. We have currently a high import dependence on areas such as leather, furniture. We don't really need to bring all those products from abroad. So what kind of domestic incentivization boost to manufacturing can be given is something that the government will now look to focus on, and which is why we're now talking about non-tariff barriers. The idea is not to increase the cost of imports, because that could also lead us to troubles with those respective countries in terms of WTO. But the idea now is to review your free trade agreements. Idea is to review all the FTAs, see where are the gaps, and then look at those areas back home in India where you can increase or boost domestic manufacturing.
Ruchi, thanks so much for bringing us that important update. So, like Ruchi just said, the key points are that it is not to increase the cost, but it is maybe to slightly inconvenience a little more, and then be monitoring what is being imported with a much closer lens so that we can prioritize our AatmaNirbhar Bharat mission all the better and really know where the focus should be. So thank you, Ruchi, once again for bringing us that very important update. Let's quickly get a market check before Karunya walks you through the COVID headlines for this morning. So we started off fairly okay, given that the global handover was pretty weak. We still managed to scale 10,800 for a bit on the Nifty, but now we've clearly pulled back from there, and we're sitting around 0.6% down at 10,751. So the big losers are Infratel, JSW Steel, Adani Ports, TechM, Indusin, and then a couple of the other large caps are also sluggish today in trade. You have a Maruti, a Power Grid, a Wipro, an Infosys, a TCS, a Tata Motors, all really not pulling their weight this morning. On the flip side, what are kind of holding us up, if you say above the 10,700 levels, are a Britannia, a Reliance, a Unilever, a Cipla, a Bajaj Finance. So it's definitely a mixed bag, stock-specific action, and definitely some headwinds starting to creep in now as we had our first Q1 earnings announced, and there should be a slight bit more pressure if you just look at the fact that earnings are expected to fall by as much as 10 to 15% in Q1.
All right, thanks for that. Let's get you some headlines with respect to the pandemic and its impact all across the world and in the country. India's recovery rate has improved to 62.09%. Uttar Pradesh is looking to observe a lockdown till 13th of July. Dharavi, meanwhile, reports 9 new virus cases, according to BMC. Punjab is looking to set up a plasma bank. Must involve citizens to combat COVID. That's a statement coming in from Maharashtra CM. Odisha slashes COVID cess on liquor by 35%. Meanwhile, IMF has urged equity-like government support for firms. Harley-Davidson is looking to cut jobs as an aftermath of COVID and how it has impacted the company's operations. WHO has formed a panel to review pandemic situation. And lastly, UK is looking to reopen indoor pools and gyms.
For that, Karanya. Let's also just bring you some flashes from the Kotak Mahindra annual report, which was just put out, and we're all eagerly looking out for Mr. Uday Kotak's commentary. And there's definitely a very comprehensive statement from him. He opens with talking about the economic challenges that are there. So the pandemic has really created a substantial issue as far as the economy is concerned. GDP growth will likely be negative this year. These are all direct quotes said by him himself in his letter. Most economists predict that GDP growth will be negative this year. And however, just one green shoot over here, unlike the 2013 or previous crisis, India's external account seems to be under control this time around. That being said, the fiscal deficit could still rise by 11 to 12% this year, probably will rise rather. And finally, just specifically for the banking sector, he just spoke about the fact that the entire loan book of the Indian banking sector is 100 lakh crore. The total capital is about 10% of that, at around 11 to 12 lakh crore. So when you look at all the loans in India, even if a small percentage, let's say just 4 or 5% of that goes bad, your bank's capital position can get hit by as much as 40%. So people shouldn't get too carried away by low moratorium figures, because as a percentage of capital, those loans are still very high. So he's still very aware of the risk. That being said, very proud of the strong brand and deposit franchise at Kotak Mahindra Bank. Karanya.
All right, Varun, thanks much for getting us that update. Let's bring on board Kunal Bothra, Sharmila Joshi. Both are joining us to help our viewers out with their queries and share their trading and investment ideas. Sharmila, hi, coming to you first. Morning. What are your bets for the day?
Well, I think that given the fact that we are now like at the start of an earnings season, I think to my mind it makes a lot of sense to really look at stocks where you're actually expecting numbers to hold. Not just, I think, in this quarter, but even going forward. So I think there would be two stocks that I would go with at this point in time. One is IFB Industries. I think all reports seem to suggest that we are seeing a good pickup in a lot of the higher-end refrigerators, air conditioners, dishwashers. And in fact, channel checks seem to suggest that companies are booked and now they're taking orders for the next month. So I think this is an interesting stock to look at. So IFB Industries would be one. And I think in a consumption play, but with a difference, that would be Radico Khaitan. Again, I think alcohol and IMFL is a good play going ahead, because you will see people stocking up once they get the opportunity to go out there and buy. So I think these two could be interesting ideas to look at.
All right, great. Thanks for that, Sharmila. Let's get a move on with our queries then. So the first one is, oh wait, I'm sorry Kunal, how could I forget you? I believe I've left you out this morning. Let's get your take on the current markets. Definitely some headwind we're seeing today.
So good morning, Varun. First of all, a couple of important data points which I think a trader has to watch out for. One of them is, that the 10,800, 850 resistance is a very, very important resistance now to take note of. So this is a third attempt, or the fourth consecutive day, if I'm not wrong, that the Nifty is trying to scale back about the 10,800, 850 zone. And all of those, attempts have led to the index, clawing back or, pulling back on the downside. So that probably signifies the importance of resistance. The other important point to take note is the put-call ratio. The put-call ratio since, last 2 days has been on an elevated levels to almost 1.6, 1.65. That itself tells you that the markets are already at an overbought kind of a territory, and the chances of these intraday corrections every now and then would not be ruled out. Also, I think on the technical front, on the hourly charts, there's a broadening pattern triangle getting formed for the Nifty, and the resistance for that is at 10,830 to 850 kind of a zone. So net, what I'm trying to indicate is that that zone is a very important resistance, and the chances are that the index could consolidate. We may go through these intraday 50-70 point dip on the Nifty, but net I believe we should just about hang around at this 10,800 plus or minus 40-50 point kind of a range. Now in that regards, I would suggest one buy and one sell in terms of trading ideas. So the first one is a sell on Bharat Forge. I think that stock looks extremely weak to me, and I believe on the short-term charts there are some credible data points which indicates that the stock has broken some major support levels. So Bharat Forge could be one of the stocks which a short-term trader could be looking at as a shorting opportunity from current levels. The targets could be more positional, so I'm expecting 330 and much lower than that kind of levels for Bharat Forge over the next 1 or 2 weeks. Sell with a target of 330, stop loss to be kept at 378. And the second would be a buy in Apollo Hospital. I think today the theme which has emerged today, and very specifically right from the opening, is the pharma stocks, and many of the pharma stocks today are looking extremely strong. I think Apollo Hospital could be at the verge of a very strong breakout. It's also a possible 200-day moving average breakout as well for Apollo Hospital. Hence a buy on the stock, recommending a buy with targets at 1500 and stop loss at 1390.
Okay, brilliant, Kunal. Thank you for all that. Let's get a move on with our queries. Sanjeev from Delhi is writing to us, and he's bought 300 shares of Sun Pharma at a price of 460, and he's got a long-term view. So, Sharmila, let's come back to you. What's your take on Sun Pharma?
On pharma, but I'm quite positive on pharma as a space, and I think a couple of reasons. The first reason, of course, is the fact that this is a sector that has gone through sort of pain for over the last 5 or 6 years, and we are seeing which sort of has tried to get corrected in the last 5-6 months, but there is a huge under ownership in this sector. Then I think this whole pandemic offers a very unique and excellent sort of an opportunity for Indian pharma companies, because we could very well end up sort of being a pharmacy to the world going forward, because the two things that are most awaited at this point in time are a cure for the pandemic and a vaccine, and I'm sure Indian pharma companies will play a very significant role in that going forward. Coming to Sun Pharma specifically, I think the way their numbers have shaped up over the last couple of years, and the way they have gotten into specialty chemicals where margins are better, trying to move out of the generic space where there was a huge impact on pricing and margins that we had seen over the last 4 or 5 years. And their whole sort of, their curve that they've been through with US FDA, etc. And now I think they seem to be emerging out of that. So if you're a long-term investor, I think it's a definite hold from my side, and this is a stock that I like.
You, Kunal, there's been a good momentum in the stock over the last 7-8 days. Do you see that sustaining?
Well, I clearly believe that pharma stocks overall have gone through a very strong monthly breakout currently, and these are breakouts which have come after I think 4 or 5 years on the charts. So I think a couple of months back as well I had indicated stocks like Lupin, Cipla, Biogon, etc. And these stocks have moved up significantly higher from those kind of levels. I believe even Sun Pharma could add on to its momentum. So look at it this way, that the stock has been a quality large cap earlier. It's been lagging behind in terms of price performance as many of its other peers. But when a sector tends to move out of a big cyclical downtrend, the initial participation, the initial phase of the participation is of course with the leaders of the price rally, but then eventually there is a catch up which with many of these other laggards as well in terms of price performance. So as of now, Sun Pharma is a laggard of a stock in terms of price reaction compared to many of its other peers. But I think that this lagging behind price action could get caught up into. So if you're in from a longer term view, and if you have a basket of pharma stocks, assumingly, then I think Sun Pharma is one of the stocks which you should keep on holding from current levels, and don't look at it from the next maybe 1 month or 2 month kind of a time horizon. Look at it from a longer term view, because I believe that when this overall pharma rally could play out, it could result into at least a 2 to 3 year kind of a rally for the pharma stocks, and that's where I believe that the real potential of gains could be unlocked from a longer term view.
Right. Okay. So that's the consensus coming in on Sun Pharma. Let's talk about our next email. It's from KP Singh. He says he's got 100 shares in Titagarh Wagons at 106. The stock has more than halved actually by now. Kunal, comment on this one. Looks like they've bought it a while back, because for the last 1 year the stock has not surpassed those levels that they're talking about. Talk to us about the future prospects going by the historic pattern. What do you foresee?
Yeah, I think the stock has not done much. I think in the last, one and a half odd year, it's been going through a very sharp period of correction. But, on the charts, as such, I think the stock is now trying to grapple through a range. I think it was 24, 25 in the month of March. And from there on, it's trying to, come back to some semblance of stability. But the only concern with these stocks is that they thrive, on periods of markets or in phases of markets when the markets are extremely buoyant. So in the last 2-3 months, we've seen a very confident market, different kind of a market than most of the long-term investors probably would have expected. And such kind of stocks, they tend to flourish in these kind of market scenarios. Now, whether the markets remain buoyant for the next 6 months, 1 year, we don't know how the current issue also pans out, the pandemic kinds of pans out, and what are the repercussions of all of that to many of the individual companies, etc. So there is a lot of uncertainty going ahead. So I think the question is that whether these kind of stocks could probably try and outperform from here on. I have my own question marks over there. So I think my advice would be that you should be looking out to book out your losses over here, especially if the stock gives you any additional kind of rally. So I think the resistance is closer to 55, 60 kind of a zone. If the stock tries to come back very close to that kind of territory as well, I would advise that you should book out your loss over there, and then try and look at maybe large cap quality names. I think something like Bharti Airtel at current levels, United Spirits at current levels, Manappuram Finance. These are quality stocks which you should have in your portfolio, and I think that's where your focus should be.
Yeah, okay. Let's get a move on with our next query. We have KP Singh from Bihar, and he's written to us, and he's bought 100 shares of Titagarh Wagons at 106 rupees, and now he wants to know if he should hold or sell. So Sharmila, coming back to you, do you have an opinion on Titagarh Wagons?
Well, I would agree with what Kunal was just saying. I think for me to, you can look for a near, meaning a bounce up to say maybe a 50 sort of a level, but I think that's the level that you should look to exit the stock. And a couple of reasons. I think definitely what we are seeing is that there is some amount of interest in the PSU space, because what I think people also perceive is that one way the government can actually help industry to get back on track is to give more orders within the PSU space, and that sort of will get people back into the employment fold and sort of help the whole capital capex story forward. But I think within that space also Titagarh is like too niche, and yes, there has been recent sort of excitement on the stock because of their tie-up with ABB and the fact that private railways could get opened up going forward. But I would really think that if you were to get that level of 50, 55, it's a good time to exit the stock. And probably you could look to invest in some other name, given where market is at that point in time, but definitely exit this stock. So I would concur with that view.
Great. Both our experts concur on the Titagarh wagon view. But let's move forward then. Let's get on board another company, Adani Power. And Ajanta Shah has written to us from Bilaspur, and she's bought 1,000 shares of Adani Power at 26. And she's looking at things from a long-term point of view. So Kunal, how are things looking long-term on Adani Power?
Not looking quite bright, frankly, Varun, because I think the stock had a beautiful rally in the 2018s and 2019s, where I remember very clearly that the stock was I think at 16 rupees or 18 rupees approximately. From there on, it had almost a 1 year or a 1.5 year rally to almost 70, 75 kind of levels. But post that, and especially after this, March, April, Feb, March correction, the stock has not been able to lift off to the same kind of fervor it had shown 2 years, 3 years back. Now, in that regard, there is a degree of underperformance which is still there. The volumes have not picked up in the cash segment as compared to many of these other power stocks. So my advice is that why not go for a switch from Adani Power to maybe a Tata Power, or maybe if you're looking at some other stocks like a Torrent Power at current levels. I think both these stocks particularly, they look very attractive, and these stocks have just about started to show the first leg of recovery after a big longer term kind of a correction. So I think there's a lot of upside which is still available provided you are a long term investor. Why not have a buy and dip strategy for both of these names, or a couple of these names, other names from the same sector? So my advice would be to switch from Adani Power to maybe something like a Tata Power or Torrent Power.
Okay. Sharmila, how are you reading into Adani Power? We also had some developments coming in quite recently about the Gujarat government cancelling earlier resolution on power tariff for Tata, for Adani and for SR. So, in the backdrop of these developments and the other triggers that you may be factoring in, what should be one's call on Adani?
So yes, precisely. I think because of this, the cancellation of the GR, what you were referring to, that was a bit of a setback for power, as all the three companies really involved in that space. And overall, I think this has been a very, very tough last, I think, maybe 7-8 years for power companies. And I'm not really seeing anything improve for them substantially. So most of them are leveraged. Most of them have multi-level issues, really. It's not one thing that is affecting them, but they are facing problems on a number of fronts, high leverage being one of them. So I would actually honestly steer clear of the entire sector. So, I would agree again that if you had to be in the power space, probably Tata Power is a better stock. But definitely for me, Adani Power is a sale.
Okay, then that is the verdict coming in on Adani Power. On that note, Sharmila and Kunal, many thanks for joining in and helping us out with your tips, your views on the market, and our viewers who are watching the show regularly and sending us emails. Okay, let's slip into a short break at this point in time. We have plenty more exciting conversations, updates lined up when we come back, so stay tuned.